and welcome to Finextra TV. I'm Hannah Wallace, and kindly joining me now is John Wise, CEO, co-founder and chairman of InvestCloud, and we're talking about trends in wealth management and the customer. Hello John, it's lovely to meet you. Thank you for inviting us to InvestCloud.
Pleasure, thanks for having me.
No problem at all. So we're going to start off talking about some of the changes we're seeing in wealth management, but to set the scene for us, can you tell us what are some of the external pressures driving this change?
Yeah, well, I think those external pressures really come from two things. One thing is the fintechs, as we all know, which is the actual cost of building a software company that is also a financial institution has reduced significantly. So that puts pressure against the big boys who are traditionally not very nimble. Sure. Also, there's a fee compression feeling in the industry that everyone seems to feel like they've been overcharged in the past and wants to be paying less and less. So typically, they're the two things, fee compression and also new competition into the markets that actually is changing the wealth management geography, if you like.
All right, and what about the investors? What are some of the different demands we're seeing there, and are investment firms keeping up with the demands?
Right, so really the end client is also demanding more transparency. Transparency actually is trust, and really, if you think about investment is about trust. You have to trust the people. If you can't get the transparency that you need to see, then the trust goes down, and that's a bad place to be. So what we're seeing really is that the investors, whether you're an institution or an individual, are looking for higher transparency into the numbers, whether it's a wealth manager or an institutional asset manager. It is about being transparent about the information that you're supplying, and also the amount of different types of information, different personas of information. So there isn't one size fits all, which you go back 20 years, it was very much one size fits all, and PS it's a PDF. Yeah, great transparency.
All right, well, following on from that quite nicely then, what about digitizing operations? Right. What are some of the problems wealth management firms are seeing in this space?
Right, so the digitalisation of the industry is a really interesting one, because it actually explores a few topics. One is that you've gone online, so it's no longer a PDF, and actually you can see line information and you can drill through into that information. So that's sort of like basic digitalisation, but it really comes on to how do you automate things like digital onboarding of a client to make it very easy to onboard. Things like open CRM that most people don't talk about. Usually you've got the wealth manager or the relationship manager typing in details about the end client. Right. In reality, an open CRM platform, then you let them type it in because they're going to get it right. Most people have a LinkedIn profile. It's usually right because they're doing it themselves. Sure. Rather than someone else doing it for you. And that's like open CRM, so you've got that sort of thing going on as well. The other big thing about digital that most people don't really understand is that when you have the situation like you and I are here today, if I'm selling you something, I can react to everything that you're doing. If you get rid of me and put a computer in front of me, now you have to achieve a thing what we call digital empathy. So how can I be empathetic to your needs online and address and react to the answers to questions that you're giving? And that can be everything from the colours that you feel to the pictures that you see to literally the dialogue. So that's digital empathy, which creates digital personas as well. So that's the big subject, if you like.
Well, we'll come on to a little bit more of that in a bit. But before we do, sort of making a contrast between the problems in the UK and the US, how do you see them differing?
We just have different accents. That's a joke because I actually live in the US, and obviously I've got a big operation in the UK. Really the difference is to do with pace, I feel. I mean, both countries are exhibiting very, very similar pace in the need of digital. I would actually say, going back about, say, 6 years, the UK actually had the drop on the digital race. And then I think what's happened is that the US has actually caught up very, very quickly. Some of the big clients like JP Morgan with You Invest has been massively successful, and then really reacting to the fintechs over there, which obviously don't like the big boys coming out with their own digital propositions. So, and obviously over here you've had Nutmeg been successful, but other people reacting to that probably a bit slower than they should.
All right, and there's a lot of talk about how robo-advisors are perhaps disrupting traditional advisors. Would you say this is an accurate account?
I think, again, if you go back in time, At big conferences, if you ask the audience, are they going to be a massive disruptor, similar to the little tourist shop in the corner that totally disappeared? The reality that we've found in the industry is that people still like talking to people. And I think the lower end volume for retail and mass affluent people, they're very, very happy to do things in a digital way. So the new fintechs have hoovered up a lot of those people. However, as soon as you have serious money, people want to see people.
Yep.
That doesn't mean to say that we always talk about, what we have seen a lot of is what I call the hybrid or the cyber profile, where your laptops and things like this, and people do a lot of stuff online. However, they still see the individual advisor as well. And it works very, very well at the high end. At the lower end, mass automate everything. And depending on the individual, obviously. And typically, silent gen, baby boomers like to see people a lot more. Gen X tends to be sort of more au fait with tech, period. And obviously Gen Y millennials, they're all geared into tech, so it's not a problem to them at all. So people using things like free trade and Robinhood and things like this, just the way they go, they don't even think about it.
Sure.
Yeah.
All right, we'll finally come to the crystal ball question, as it were.
Yeah.
How do you see this space evolving in sort of the 10, 20 years or so further down the line?
Right, so I think at the end of the day, the established houses will still be like the established houses. The key reason is because the access to the market segment already. So if you look at a lot of our bigger clients, they focus on credit card users. When you look at them, they've got like 1 in 4 households use their credit cards. They have a lot of data on how they use money, and therefore they can target very readily, and it's an open market where a new fintech has to spend millions and millions of dollars to even get their name known to those people, yeah, let alone trusted. And so if you've got a credit card with someone, it's pretty easy to upsell them something else. So the establishment will still be around, and I think there will be a lot of challenger banks who get to a reasonable size. I do hope that the market just doesn't gobble up the smaller people. I think there's too big to fail type. People don't like that. They like a little bit more optionality. So I think that will go well in the run. But digital is going to be at the forefront of the things that I always say. If you're using digital, are you using it to grow your clients, to retain your clients, or mass automate and make things more efficient as you see fee compression coming down? And you're going to have to do that regardless. So even the big banks, to remain in certain markets, they have to mass automate, and the processes that they use today is too elaborate. I mean, it's in England, people understand this in England, it's Heath Robinson by design, and that's not a good thing.
Very good.
Yeah.
So watch this space, I think it's safe to say.
Yeah.
John, thank you so much for painting the picture for us. It's been a pleasure.
Pleasure is all mine. Thank you.